So today I lost over $4,000 in the stock market, and I'm not even upset. And to some of you guys, that might be very surprising. But for some of you that have been following my channel for a while, understand exactly what I'm talking about. You're probably nodding your head right now, and you're probably feeling the exact same way. And the reason why people might be feeling the exact same way is because for some of us, we're dividend investors. And dividend investors don't necessarily care about the 28,000 or 2,840 number on the screen or the minus 85 on the screen. What they care about is dividend yield, or what their dividends will be next year, or what their dividends will be this month. We're looking for income. We're not looking for capital value. And it's not to say that people don't get excited when their portfolio goes up, but for most dividend investors, we get excited when the market goes down, because we know that portfolios are made when the market goes down and people are able to buy great companies at great prices. What I'm saying isn't really original, or what I'm saying isn't necessarily genius. It's part of what all great value and dividend investors have been studying and acknowledging. And I think where some of you might be sitting there scratching your heads, not understanding why somebody like myself losing $4,000 and it not really caring, is because that $4,000 is on paper. It's not actually hitting my account. And that 3% that goes down on the screen there, that 2.93%, that means if I were to invest any money today across my entire portfolio, it means I'm going to get 3% more dividends. Because as far as I know, all my stocks that I have investments in, none of them cut the dividend today. So what that means is I'm now able to buy 3% more stock and get the same amount of dividends as I did yesterday for 3% less. And so if you're able to understand that, and dividend investing is something for you, then I would caution you to listen to exactly what I'm saying. Warren Buffett thinks about this. Charlie Munger thinks about this. Value investors think about this. People that get afraid when the market goes down 3% are CNBC, Fox News, and the reason why they're getting upset is to get a rise out of you, to get ad money out of their budget. The more people that watch their show, oh my God, the market's down 3%, and people panic, the more they watch the news, and the more ad revenue the news, Fox News, CNBC, Fox Business, what have you, are able to sell, because you're watching it. The more viewers they have, the more people that, or the more they can get in ad revenue. And I hope that you're really trying to understand and you're not just blowing this off. For me, the way I look at it, and I think at this point I'll probably be putting things up on the screen, I have money that I was planning to invest. Because I moved, I had to sell my car. Unfortunately, I love that car. I got a car today. Also, I'll show you something else that I picked up, which is why I'm making this video so late. Because I sold my car, and because I regularly contribute money to my investment accounts, I will probably have close to $14,000 or $15,000 to invest this month. Not saying I'm going to invest all of it, but at the moment I have a decent amount sitting in my checking account, and I'm moving that to my personal savings, and I also have a decent bit in my personal savings as well. Waiting for something like this. At the moment, there's a bunch of money moving around because I had to pay for some stuff to move and what have you, but once I'm able to settle in and get my head straight and understand, the inflows and outflows out of my checking account over the next month or so, I plan on investing, and I hope the market continues to go down. Great companies like your Wells Fargos, your Realty Income Corps, your um, Microsofts, your you name it. I mean, I made a video about this not too long ago about how the market dropped at one point in 2008 over 50, close to 6%. And you know how much the dividends of the S&P 500 dropped? 27%. And then within, I think, a year, maybe I think it was like within 18 months, I know for a fact, the dividends that you were getting matched again. So I think a lot of people are always worried about timing the market and trying to understand, oh, is this the right time to invest? And I mean, you had one of the worst financial crises in United States history, second that we know of, in comparison to, let's say, the Great Depression. But the Great Recession was huge, 60% losses in terms if you were to buy at the high, sell at the low. But if you think about it, if you were to have bought at the high, sell at the low on dividends, you would have only lost 27%. And that 27% was gained back within 18 months. And you could have been buying over that 18 months time period at extremely cheap prices. And now your dividends, I think, are probably 3 times as much over the course of 10 years. So I think the S&P 500 back then was paying like $1.50 or something like that if you were to have bought like SPY. And now it's yielding over $5. So, I mean, come on. I think you're listening to the news, and the news is always going to try to sell you a crock of shit so that they could always continue to sell ads. What I think you really need to do is put some due diligence in, do some research on your own, invest in great companies, and days like today will be holidays for you. You will be celebrating days like today. If I were to sell today, of course I'd be like somewhat upset because that means, but I'm not selling today. And, I have at least 10 years that I know of where I'll be continuing to invest unless, God willing, something bad happens to me. But, I mean, I'm not going to need this money before 38 that I know of. I'm hoping in the next 7 years I'm able to invest enough where I can pay off all my expenses and then some, hopefully. So, I'm not going to need the money in the next 18 months, 24 months. If I did, then maybe I'll be singing a different tune. And if you do, maybe you should be not listening to me, straight up. I think it all really depends on, I think a lot of people always get upset and they're like, I don't understand. I'm not saying dividend investing is for you. I'm saying for me, and if dividend investing is something that you're interested in and it fits your criteria, whether it's risk or whether it's your time frame or whether it's what you're looking for, then it's all you. But if you need your money next week or you need your money in a year from now, I can't help you. I can't help you anyway because I'm not a financial advisor, disclaimer. But if you need money in like 15, 20 years and you have low risk tolerance and you want to basically be getting income and you don't necessarily care about what the portfolio value is, dividend investing is for you. If you want to make 20 times your money in the next year, then it's not for you. And I'm not trying to sway you one way or the other. What I'm trying to have you do is listen to the words that I'm saying. Think internally about what's best for you. Does long time horizons, does low risk, does income sound like what you want? Or does high risk, high returns, need the money next month, once I get the money I'm immediately going to buy a house with it, sound more like you? And those are two ends of the spectrum, and I'm sure there's literally an infinite amount of different ways that you can take in between there, different allocations, different sectors to invest in. But I'm just saying dividend growth investing is mine, and that's what fits my personal strategy and portfolio. And so when I see $4,000 coming off the paper, I don't care. I'm excited. I got $14,000-15,000 that I'm, potentially ready to invest in. If the market continues to go down 10-20%, I'm excited. I mean, I'm fortunate. Normally I have like, I don't know, whatever money I get for that month, which is like 25 to $3,000, maybe $4,000 if I'm lucky that month to invest. I have like a couple months worth of salary that fortunately I have just because, I've been moving stuff around and selling stuff. So anyway, I know this was more of a ramble than I'm used to, or you're used to probably, but and I didn't really move off this S&P 500 screen at all. I just recognize that. But if you're interested tracking your dividends, or if you're interested in dividend investing, I made a spreadsheet for us to evaluate our portfolios. There's a link down in the description below. It's for purchase for $1. About 11 of you have already bought, which I'm super grateful for. So far, so good. People from Czechoslovakia, Sweden, Canada. I was super surprised. Spain was one of them as well. Most of you from the United States, though. But thank you so much. It's pretty crazy. But if you have any other questions, leave them down in the comment section down below. More than happy to answer your questions. I love talking to you guys in the comments. And yeah, that's really it. And if you haven't already, please subscribe. I talk about most of the time what I made that month in terms of investing. Oh, cool little tidbit. I made like $200 today in dividends. Like BP Midstream Partners paid me, and Cheniere Energy Partners paid me. I think one was like $160. I think it was my BP Midstream, and my Cheniere Energy Partners was like 70 something bucks. So it's like $230. I mean, how awesome is that? And that's the 14th. I get paid again tomorrow by like Realty Income Corp and Main Street Capital, and like dividend investing is great. I mean, I've already got 2 paychecks. Tomorrow I get paid by my regular job. I think on the 1st of August I got paid by like Verizon. So like I'm already up to like 7-8 paychecks this year, or this week. Sorry, this month. Don't listen to me. Anyway, another ramble. I'll talk to you guys on another video, and looking forward to seeing what you guys write down in the comment section down below. Cheers.